Hello everyone, welcome to Forex Comrade. So in this video I'm going to use simple price action strategies to raise various small accounts. So stick around and learn all the tricks and hacks of simple price action and be able to apply it to your day-to-day trading. But before we jump right in it, I want to thank all of you guys who are returning subscribers, and for those who are new to this channel, don't forget to subscribe so that you don't miss on any important information that I will post in the following videos. So don't forget to click the link in the description box below to join my Telegram channel, where you get free courses, signals, and any other trading insights that are important to you. So without wasting much of your time, let me jump right into it. So we are going to start with a 76-cent account. So in this 76-cent account, we are going to trade the Drift Switch Index 10. So you can only get these in the derivative broker. So if you don't have an account, click the link in the description box below to create a derivative account so that you can trade these synthetic indices. So the first thing that we do is we draw the trend lines. So the first one is the support line, that is marking the areas of the higher lows, and then the resistance that is joining the areas of the higher highs. So these areas are very important because they show you where the market is going to do retracements. So at this point you can see that the market has touched the support and then it went up where it touched the resistance. So at the resistance, we know that the market is not going to break to the upside due to the fact that rising wedges do not break to the upside, they break to the downside. If you follow my courses very well, you know this course because this is what I usually trade. However, I don't have a big account to trade this one, so I'm just going to execute 2 trades only. So as you can see, I've traded 2 positions, and then now we are in 30 cents profit. We are trying to raise this account, so let's hold it a bit longer so that we can maximize the profit. So in terms of take profit, you just put it at the next area of confluence, but since we have already reached that, we are going to put it at the next one that is way below. And then I have closed. Now we are $9, which isn't much, but at least we are trying. So we're going to look for trades elsewhere in the jump 25. So the first thing that we do is mark the areas of confluence, that is the support line where I've put the shadow zone, and then I put another shadow zone that is marking the resistance. So these 2 points are very important because they mark the points where the market will reach in a ranging market. So if you don't know what a ranging market, I'm going to explain that in the next following videos. And then now we put the trend lines. So the trend lines are marking a downward slope, which is created by constant lower lows and lower highs. So we are going to connect these lower lows and connect the lower highs. So this forms a falling wedge. So just like the previous one where we traded the rising wedge, we are going to trade the falling wedge on this one. So this is supported by an area of confluence that was created before, that is the support line, as you can see from that left side. So this is a clear indication that the market is going to face a bit of challenge by the bulls. So we are going to trade the bulls because even if they are going to be overpowered, they will control the market for some time before they are overpowered. So we're going to buy and see if we can maximize on this one. So derivative has a fade, so I was able to pull a 4 position trade where I have maximized. So let's hold and see if we can make more profit from this one. So in terms of take profit, I always say you put it at the next area of confluence. At this point, it was the lower high that was created. So right now we are in profit, and considering we had a dollar account, this is actually incredibly high. So as you can see, we have closed in $19. This is a lot, guys, because our account was very small. So we've moved on to the volatility 75. So in the volatility 75, we just do the same thing that we did earlier on, that is marking the areas of support and resistance. But in this one, there was something special. There is actually a strategy that I have never taught in any of my videos. So stick around and make sure that you witness this thing. So as you can see, I've pointed on two areas, the candlestick, and then there is actually what we call a fair value gap. So I'm going to explain this thoroughly in the next video, what a fair value gap is. But it is a resistance or a support that is created by a very big candle followed by a candle that is small, but this point is respected for quite a number of times. As you can see, I'm going to point out a point where it was respected. So even though the market has to go up a little bit and touch that wick and then comes back down. So this is simple. As you can see, at that point where I've put the shadow zone, this is a point where the fair value gap was respected. So we know that the market is going to respect it for the second time and go up, just as marked by that arrow. So it's time to execute the market. Mind you, this is volatility 75. It's a very volatile market, so you just have to make sure that you are applying the proper risk management skills. So as you can see, now we are an $18 profit. So this is actually a lot. Our account is almost in 40. You can actually close and then just leave the market. But however, on this one I was a little bit greedy, and since volatility 75 is very volatile, I blew the account. As you can see, now we are in 1 cent. This is very bad. As you can see, the market retraced back, so probably maybe I didn't see the fair value gap that much. But yeah, sometimes that's what the market does. You just blow the market and then it happens. And then now I found it again. I'm in $54 profit. I'm going to start looking for trades in this volatility 25 using a new account that has $54 in it. So I'm going to try to make sure that I maximize, because I can't afford to lose this one again, just as I have lost the previous one. So we just draw the lines of confluence that are respected for quite a number of times so that we can make our informed decision. And then now I'm drawing the support line. But as you can see, at this point we cannot really draw a resistance line that is connecting all the points. As you can see, there were points of higher highs and points of lower highs. So at this one, we can just draw different trends. As you can see, I've drawn more than 3 trends that are being respected. But then we have to look at the current one. So this is what I'm drawing right now. And then there was more like a Quasimodo setup, whereby the neckline is not symmetrical. So at this point the market buys, but I was late in the market, so the market has already bought. But however, the market hasn't bought well, so I can actually utilize this trade, because I can still enter the market and then just scalp a little bit and leave the market. So I'm going to execute the market and see if I can get a lot from this one. So as you can see, I have executed the market. and then after some time we are in 236 profit. This is a lot. As you can see, the market went up, but then it is now facing a resistance from that line, so it is doing a little bit of a retracement. So you can just close the market and be satisfied with the profit that you have collected. So I'm going to close and look for another trade elsewhere. So I'm not going to use this same account to trade the next trade because I'm quite scared. Maybe I can just trade the next one, but I won't use this one throughout the video. So I'm just going to close and then look for another trade and then change the account. So now I have closed. As you can see, we are in $210 profit. So let's look for trades in the volatility 51 second. So this is another very volatile market, so you have to make sure that you put a very tight risk management strategy, because at any time you can just blow the account even if you're correct, because a little bit of a retracement on this one is actually very harmful. So I'm going to buy at this point, as you can see, because the market here has reached two resistance line. Even though this is a rising wedge, we usually expect breakouts from the downside. The market has to respect two resistance areas before it goes back down. So we're just going to scalp this one. It won't last long because the bears may actually force the market to break to the downside. So now in 400, I'm just going to close because, as you can see, I've actually made a very bad decision, because I actually put a lot of positions, because if the market had actually retraced, I would have blown the market. But however, I am going to use a different account in volatility 10. As you can see, I have a $55 profit account. I'm going to use that one to trade this volatility 10. 1 second. So the first thing that we always do is we look for the areas of confluence, like in any other strategy that I use. As you can see, I'm drawing the trend line that is marking the higher highs, that is the resistance line, and then I have put another resistance line that is symmetrical, and then as you can see, there was a breakout to the upside. So usually this can be considered as a head and shoulders that is not symmetrical, but however, I don't usually like to trade it that way. So I'm going to use another strategy, even though it might be bring me the same results. So now I'm going to draw other lines that are respecting or that are in line with my decision. As you can see, where I'm putting that arrow, this is another big candle that is actually forming the fair value gap. So in the fair value gap strategy, you take note of the previous candle and the next candle, and then you put the line that is in between those two candlesticks, as you can see, as marked by that shadow zone. So these two candles are the ones that I'm currently marking, and then I put another shadow zone on that candle so that you can clearly see that there was an in-between line or gap, which is known as the fair value gap. So the next time you see the market comes back to that fair value gap, it has to retrace or it bounces off that line going back down. So this is a very powerful setup, but however, you can use it in conjunction with other trades or other strategies that you know. But in this one, there were two confirmations, which is good enough for me to execute the market. So I'm going to sell. As you can see, I have already sold let's see if we can maximize. Right now we have already doubled the account. It is a lot. I can actually close and then look for other trades elsewhere, but however I'm going to stick around a little bit longer and see if I can maximize the profit. In terms of take profit, I'm not going to explain. You can just rewatch my other videos and see how I do it. And then as you can see, we are in $148 profit, and our account is in $62 because it has touched that TP. That's why it is in $62 profit. And then I've closed the market. Now we are in 150. This is a lot, and I'm going to use this same account to trade BoM 1000 index. So trading BoM is sometimes very nice, but if you don't know how to manage your emotions, please do not. I'm going to use the same strategy, that is the fair value gap, or rather I'm going to use to draw the first things that I always do. That is the lines of confluence, that is the support. As you can see, I've drawn this support and now I'm drawing this resistance. So these two lines are very important because they show you the direction of the market, and they show you the points of strong support and the points of strong resistance. And right now, as you can see, the market failed to break to the upside because this is a rising wedge. Usually it breaks to the downside, as I always say. So the market is supposed to bounce to the downside. It is definitely supposed to bounce to the downside. So with that information alone, I'm going to execute the market because I know this is very good, because it's also boom, and sometimes spikes are going to be overpowered at this point. So now that I've executed the market, let me see how much I can make from this one. This one I'm very certain about it. Let's see. And then after some time, we are in $1,138 profit. This is a lot. I don't even know what to say about this one. This is the same strategy that I always use. As you can see, the market retraced back down a very high. Yeah, this is it. In terms of take profit, you just put it at the next area of confluence. That is the support line, that is down there. And then I've closed the market. So this is it, guys. Let me know what you think in the comment section below. Please do not forget to subscribe, hit the notification bell so you don't miss out when there's any important update. Please do not forget to join my Telegram channel, where I'll be posting very informative trading information. So don't miss out. See you in the next video.